Hi, this is JB Cycles with an update on September the 11th. So I still think my scenario in red is the most likely scenario, but we are at a critical point the coming week. I think my 4-week cycle has shifted from this old cycle in gray to this new one. I have put it in here in black. So let's switch over to another one here. Here I have shifted the S&P by 1 cycle, by 2 cycles, by 3 cycles. So if we look at the light blue one here, we see that the low was at the exact time as the previous ones. Here we had a low, here a low, here a low. So we are now in the bullish phase of this 4-week cycle, and we see we have risen up just like the previous cases here, and what we should expect from here is some kind of a swing down, a swing up, and then a swing down. But the way these swings will behave is very critical, because in my overall bearish case we need to see sabotage of this bullish phase. So if we look over here, in the bullish case we could see just a mild downswing, or perhaps first we gap up on Monday and get more momentum, and then we have a mild downswing and then another swing up to a higher swing high, and that would make it an A, B, C going up. And that would probably be too bullish in my overall bearish case. It will really question my scenario. So in the bearish case we need to see sabotage, meaning a deep downswing. We could go up all the way to the previous swing high, make kind of a big bear flag, or a lower low, and then we should kind of crash down to lower lows in this cycle here. So switching over to the hourly data, the Dow Jones, looking at my purple wavelet, it is suggesting we are close to a sell setup. Going back 1 week, I said I suspect that this would morph into a kind of a double low, because after an A, B, C down, I would normally expect some kind of a bigger consolidation or upswing. So it was a double low, and now we are in the bullish phase. So in the bearish case we should see very soon a downswing, then another upswing, maybe a lower high, perhaps going all the way back up to this high before we go down to lower lows. But in the bullish case we could see a gap up on Monday. That would give more momentum to this monthly cycle, then a mild downswing, and then going up higher, trying to test these highs. Or if we don't gap up on Monday, we could see just a mild downswing, making a higher low, and then opening the A, B, C scenario. So zooming out. Okay, when looking at previous bear rallies, or the most relevant ones, we see some of these just crash down to the previous low and lower, but several of these needed first some time here to make a lower shoulder, to consolidate here, making a bigger A, B, C move down, and perhaps D and E and so on. But we are still in line with these previous analogs, and they suggest we shouldn't go much higher from here. We should rather see chopping around for another week or so, and then we should start really breaking down lower. Also, here I have a cycle chart. I have the 7-year cycle in red, I have the 9-month or 40-week cycle in green, and both cycles are pointing down. And in red we see we are in a very bearish phase of this 7-year cycle. So here in gray I have the 80-week offset. That's 2 of the 40-week cycles, and we see we had a reaction here at this offset, and we made a low and a rally. Now we are back down at this offset, and we had another reaction up. But given these cycles, I would strongly expect that we need to go down here, break this offset, and flush down at least to this previous low, but probably lower. But the cycle is not 100% edge, it's a bias, it's a high percentage bias, but you know, it's possible we could override this cycle. This is the double cycle offset, you know, going back in time. This is the single offset, and this is kind of where we got the bear market confirmed. First we tried to find support at the offset, rallied, but then broke down, and everyone realized it was a bear market. So is it a soft landing? We have the bear market relief rally, but is the bear market over and we break up? Or is it just, yeah, waiting for the next leg down? Yeah, I think that was it. You know, we broke down below all these lines, and now we have a reaction up. We closed above the 50-day moving average, but we should not see continuation up, but rather making this just a shoulder before going down. So we have to be open to all kinds of scenarios. You know, you always start to question your scenarios at these extreme points. Down here I got a bit bearish colored, and I thought, oh, we could just continue down. And up here I started to question, am I a fool? Is this not a bear market anymore? But you know, we go to these extremes up to the 200-day moving average, and that's typically where these reactions go, and then they turn down. And just like here, after this move down, we should expect going up, testing the 50-day moving average. So it's like as expected, but you always get uncertain. Will it really turn down again here now, or will it break up? So, but with cycles, I trust them, and maybe they will provide some cycle magic, and there will come some reason, pop up some reason this coming 1 week or two, where the markets find out that, yeah, we're not going to rally, we need to go further down. See you on the next one.